following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking music means it's time once again for the Option Block, everyone's favorite bit of option programming. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And as always, I encourage you, if you'd like to follow along and play the home game, or indeed learn more about any of the subjects we're discussing on the program today, including the unusual activity alerts, or just shoot us a question you'd like us to answer on the program, then you can surf on over to theoptionsinsider.com. You can use our comment system to shoot us a question. You can shoot us a question via email, questions@theoptionsinsider.com, or, of course, Twitter and Facebook. We love to have you guys sounding off on the show. And, of course, I'm not alone on the old Option Block All-Star panel, not by a long shot. I am joined by my usual cast of characters, starting off with the man beaming in all the way from St. Charles, Illinois. They've just mastered indoor plumbing, and he's rearing to use it. None other than Uncle Mike Tusaw from RCM. Uncle Mike, welcome to the show, sir.
Well, with the markets moving like they're moving, I have no need for indoor plumbing, by gosh, because I am not going to the bathroom.
You're not going anywhere. Your BBI is walloping zero today, I'm guessing.
It's been a moving, that's for sure.
And also joining me on the program, the man who has held just about every position in the options industry since it started. None other than Alex Jacobson, VP over at Options Express, which we call you VP of Awesome. Is that your title over there, Alex?
VP of Awesome is fine. Yeah, that's cool.
Also, Viceroy works in a pinch as well, I know.
Yeah, they're calling that. It's become a nickname that is stuck here now.
I'm glad we could oblige you, sir. We're always eager to help. And speaking of people...
Interesting.
Oh, good.
Interesting day today. We held 1480 on the S&P. Sold off a little bit at the end, but very interesting action today.
Yeah, we actually had some life towards the end of the day. Seemed like there's going to be a sell-off, and then no, sir. But we'll get into that in a second. First, we want to introduce our last person on this cast of characters, and what a character he is. You know him, you love him. He is none other than Mark Sebastian from OptionPit.com. Mr. Sebastian, welcome back to the program, sir.
That's right. And as word comes out that I am on today's show, you watch that download number spike. Because we all know who the draw is, and it starts with an S and ends with an Sebastian, and it's me.
I'm like, why is our needle just going to zero on downloads today? I don't understand what's going on.
Who is this Mark S. Bastion?
Yeah, S. Bastion. We need to get him on the show. He sounds like a big draw. Anyone know how I can contact this S. Bastion fellow?
Yeah, well, he's a big fan of Transformers.
Yes.
He's loves cars.
And he's kind of a big deal now.
The funny thing is that with that description, I just described myself and my toddler.
I was going to say, I think your little guy probably loves cars too, and perhaps Transformers.
He loves cars and Transformers.
A man of discerning taste, I should say.
He is.
All right, with the team assembled, listeners, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. And as Alex alluded to earlier, it was indeed an intriguing day. Of course, Uncle Mike with a whopping BBI of 0. You know, there was some action on the street today, particularly in his name of choice, good old Apple, but we'll get to that in a wee bit. Of course, today we saw some mixed action earlier in the session with a lot of the major indices heading towards the red, but towards the end of the day, everything closing on the green side. Most of the major indices, actually all of them, up 0.5% or more on the day. S&P closing at almost 1481, up 0.6%. NASDAQ following suit, also up 0.6%, and the good old Dow up nearly a full percentage point to 13,618. And of course, keeping in line with the fact that we're actually seeing a little bit of movement in the underlying today, fixed cash ticking up a little bit to the upside as well, up about 1% to 13.59. And I think we'll mix it up today. And Uncle Mike, we'll start with you. I know the BBI was 0. I think I have a few guesses as to why that might be, but why don't you illuminate our listeners? What was catching your eye in today's activity?
Well, the market's actually moved a little bit today. That hasn't happened in like 2 weeks. We've been on a pretty sideways market these last couple of weeks. So actually having to watch numbers change on my screen, it's kind of not only is it messing with the plumbing, it's messing with my eyeballs too. I was kind of getting fixated on everything staying the same. But no, just in looking at Apple today, I'm still short the 510 puts right now. And then tomorrow I'll likely roll them in one way, shape, or form. I'll make a decision on that tomorrow. I was getting ready when we closed below 500 the other day. I was getting ready to roll them down, but Apple was kind enough to come back up for me and keep me in, we had that gap up above the 500 level, so they were kind enough to come back for me to allow me to stay in my 510 puts. But for now, tomorrow I'll likely do some type of a roll, and what it will be right now I do not know, but we have the earnings coming up. I'd prefer to be out of it going into earnings, but we'll see what tomorrow brings.
How was that moment when Apple had the temerity to finally break south of 500 and actually close down there? What was that moment like in the RCM office?
There was mass paranoia everywhere.
People jumping out of windows. It was insanity.
Yeah, you could, if you were anywhere located near CNBC or Fox Business or Bloomberg, you almost got flooded out of the building as reporters were peeing themselves with fear and excitement and incredulousness.
And then it came back the next day.
Oh, yeah. I mean, it was hilarious. I mean, half of the problem with Apple right now is that, one, it's the only stock that anybody in the media seems to understand. Two, the media hypes it up like it's like a drug dealer pitching crack. And three, it just, the hype factory. It's the same reason why, I held them partially responsible for the Facebook debacle. It's like, oh, this is something I use that I can report on. And what they create is a hype machine that causes the stock to have some, call it irrational exuberance. And now that it's finally come off its ledge, it's allowing smart, thoughtful people like Mike Tusaw to, start talking to their clients about investing in a logical manner in the stock. At $700, it just didn't make any sense. Anyway, it was funny watching the novice's reaction to Apple as it dropped.
Well, once it hit that south of 500 level, the sky is falling, and all of the worst is coming to pass. And of course, I can't believe you would accuse the media of hyping something beyond its merits. Madness, sir, madness.
Yeah, no, I mean. Andrew Ross Sorkin almost crapped his pants.
Well, the other thing that was interesting on it, I'm not typically much of a technical guy, but Apple hit close to around 75% retracement of its major rally when it hit around the 480 level. I don't have the exact numbers in front of me, but it did hit a pretty key technical level along those lines if you follow retracements and that type of thing.
You know I'm all about the retracements, Uncle Mike.
That's what I was thinking. On this show, I was thinking it would be the retracement block.
That's where we have a new segment. The T&A block, the technical analysis block. How about that?
There you go. So yeah, then the other thing I thought was kind of interesting, just looking at it, how long's oil going to keep this rally that it's had going? Oil just continues to rally. Are we going to go above 100 again? I don't have any positions in oil, but that's just another thing that was kind of catching my eye today. 95 seemed to be a pretty key level for it to break, and it just shot right through it today.
If you hit oil, you're going to dive into the big futures options. You're going to dive into the big futures. You're going to use USO. What's your weapon of choice out there?
Well, I'd probably tend to look into more of the futures side of it, just because of the fact that you guys would make fun of me too bad if I ever used USO.
There might be some blowback on the USO front. I was going to put that in.
Yes, there would be.
No, not that, I'm in the USO. I prefer to use the futures side of it or stocks relating to oil.
Plus, in the crude contract, that may be the most liquid futures option. Putting euro dollars off to the side, the crude is great. You can trade them at the midpoint. There's good liquidity. It's not the case in a lot of futures options. So USO is a poor second choice. And using the individual names, there's a lot going on. You don't often get correlation. So that's a case where the options on crude are far and away the preferred product.
Yeah, that would be my preferred method.
So, Mr. Sebastian, in between watching the media wet themselves with joy over Apple, what else caught your eye in today's activity?
I mean, you're right. We saw a little bit of actual market volatility, granted on a rally today, a whopping almost 0.56% gain in the market. A little over 0.5%. We actually saw the VIX and the VIX futures start to catch a bid. You know what I've actually been watching? While the VIX is actually at multi-year lows, and I'm writing about this on my blog right now, is that the gold VIX, which had been at all-time lows since the listing of GLD options in mid-December, has caught a real rally over the last week from the 12 level up to, kind of the mid 14s, closing just below 15, and could really be setting up for a bit of a rally.
Mr. Tusaw, you've been playing back in the GLD land these days?
Yeah, still in GLD right now. To kind of add to Sebastian's point, I've been leaving the upside open on GLD for about 3 or 4 weeks now. I'm long GLD, and we're long the 160 puts for February right now. Now, the next week or two, we'll probably make an adjustment to that in regard to, we don't usually like letting the options get that close to expiration that we're long. But I got into the 160 put probably about 3 or 4 weeks ago at $1.57 as a protective leg, and it was at 164 at the time. And the reason I did it was just, number one, we had the fiscal cliff that we were all going to die last 3 weeks ago, right around New Year's, and I wanted to leave the upside open for gold for that reason. But number two, volatility was just so ridiculously low in gold. I'm just like, well, I'm going to buy a protective put for the time being. So we've only lost about 50 cents on that protection, and it's pretty much stayed the same. It's only down like about 40 or 50 cents on the underlying itself. So it's definitely something to where I've been open to the upside, and if we go up much more, I think it'll be a time to start getting back to my weekly GLD covered call sales again.
Yeah, the GLD report coming back to an option block near you. Of course, there was some other activity going on the street today. We had some earnings, including before they opened, some financials coming out. Citi and Bank of America both taking it on the chin today, down 3% and almost 4.5% respectively on the day. So the street not exactly loving what Citi and Bank of America had to say, but regardless of their report, the market still decided to rally in their face today. And of course, right now, after the close, we're waiting here on Intel. Excuse me, my old stomping grounds. Look like they haven't come out yet. They're hovering unched. They closed at $22.68. It looks like they're coming off a little bit now in the after hours. Looks like the number might be out. Of course, Intel is notorious for whipsawing around the closing level before settling on one direction after an earnings announcement. I've told a story on this show in the past many times about how I used to get some very, very erratic gamma scalps in after earnings, and it used to be a pretty fun time to have some little stub quotes hanging around out there. But yeah, we'll keep an eye on Intel throughout the show. Alex, anything catching your eye in today's activity, sir?
Well, just in our internal numbers, our customers are getting more bullish. I talked about the internal put calls a couple of times in the last couple of shows, and it's clear that the sentiment inside the options express world is getting more bullish. And two ways to play that: you see gold volatility going up, you see more bullish sentiment, you see market hitting new highs. Half the world is going to tell you, well, that's it, we're going to 1,600 on the S&P, and the other half of the world is going to get contrarian and say, whoa. But we're getting to levels now with this low volatility where, again, I think this market is positioned for a significant move. I'm just not sure which way. I can make the case both ways. Earnings have been kind of a non-event. The news coming out on just the general financial news this morning was terrific. And falls low. So something's going to happen here.
All right. Thank you for that, Alex. And that's going to close out the trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. And I just love that funky tune. It gets me in the mood for some odd blocking and some picking out some unusual activity. And we're going to kick things off with a Sebastian special. If ever I saw one, the second I saw this name, it just screamed Sebastian to me. I knew you would love it. It is, of course, your favorite, Brookdale Senior Living. Ticker symbol BK.
I love Brookdale Senior Living.
Ticker symbol BKD. Because when you think housing of the elderly, you think none other than Mark Sebastian. And today, of course, if you want to play the home game, of course, listeners, follow along on theoptionsinsider.com. You'll find this alert and all the others we're going to talk about right now. And we saw some upside love coming into Brookdale today. Of course, they closed at $27, roughly $27.50, up about 1% today. But that's not where the love didn't stop there. Oh no, dear listener. The love extended out to the Feb 30s, which were bought en masse today for a substantial amount. This is the name that usually does a whopping 700 contracts a day, and they put up over 7,000, nearly 8,000 of these Feb 30s today. The bulk of them trading in a few blocks for around 40, actually a lot of about 50 cents seemed to be where the bulk of them went up in a bunch of blocks throughout the day. This is just some substantial upside paper here for Brookdale.
My understanding is that their secondary venture, Gilf.com, is about to take off and be bought by Adam and Eve, and that's where the potential deal factor is in what's going on with the stock.
I was going to say they had delicious tapioca pudding, and the word got out, and so someone was buying the upside. But your way is good too.
Yeah. They've got the other thing is they've got basically indentured servants just baking all the time, and they're sewing buttons. And they're just charging an arm and a leg and not charging anything to their clients. It's kind of similar to what Mr. Miyagi did to Daniel-san as he was teaching him. They say, well, we're housing and feeding you, and you're going to bake, and you're going to do button sewing, and then we're going to charge a premium. And I think those are the two major operations they're running there.
So you're saying it's like a jail?
Essentially, yes.
Do they do license plates as well? Round it all out?
No, they don't do license plates. It's called outsourced grannying. I'm not sure if you've heard of it.
I could pick up a nice outsourced granny or two. Might be kind of handy. I'll have to look into that. We also
I heard you shoot like a granny.
What was that?
I've heard you throw like a granny.
Yes, indeed. I'm
Is
quite
that
the
true?
throwing granny. I'm often accused of that.
That any of that gets into the show, by the way.
Probably very little. It's nice that I control the end of that, so I can just say that will go. That saves me the hassle of having to actually talk. Let's see. All right, next up on the old odd block we have Avail Pharmaceuticals. This is another one that does a lot of paper, up about 300 contracts a day, doing nearly 2,500 today. This one closed at $7.61, down about 6% on the day. Not a good day for Avail. Despite this downside movement, we saw people coming in, piling in on the short side to the Feb 7.5 puts. A bunch of these went up, almost all of today's volume, almost 2,200 contracts going up. People blasting out the Feb 7.5 puts are 55 and 60 cents in a couple of different blocks. This I know this one was highlighted by your cohort there, Mr. Giovinazzi and Mr. Sebastian. Have you been watching this one today at all?
Oh, yeah, no, not at all. But I'm sure it's another one, Avail Pharmaceuticals. Don't know much about them, but I'm sure that this trade makes tons of sense.
All right, this trade makes tons of sense.
I'm gonna go do it right now with that endorsement.
That might be the best thing we've ever said on the option block. Listeners, get out there right now. Get it in your newsletter.
There's the advice
trade,
here, guys.
This trade makes tons of sense. That is staying in the show, definitely. That is gold. That is quality. All right, last up here on the gold/quality block, we have a frequent name here in the old odd block. It's DeVry. This, of course, provider of paid educational services and trading, closing today about unched on the day at $24.15. This is another name that doesn't exactly light up the tape. Does about 1,600 contracts a day. Did about that many today, but it was the activity itself that actually caught our eye. We saw a put seller coming in, sweeping across multiple exchanges, and the target of their love/ire was the Feb 20 puts. We saw over 1,000 of these going up today. That's a substantial amount for DeVry here. Open interest only 300 contracts, so all opening paper for the most part. The bulk of these went up for about 25 cents. Given the implied vol levels here. This is not a bad sale. 30-day implied vol coming in at about 57%. That's not a bad level for a good DeVry put here. I don't follow DeVry too much, but seems like looking at the chart here, this is not exactly a risky sale. DeVry's been hovering on this 20 level for most of the recent months.
Yeah, I'm looking at this trade. It looks like 1,000 went up on the 20 strike and 500 went up on the 25 strike. So kind of an interesting one. Maybe some sort of weird collar trade or something.
Yeah, 500 of the calls. Looks like it did maybe it looks like a 1x2 on the calls. That would make sense. Calls are a little bit pricier. So do 2 puts to buy 1 call. Makes sense. So it could be a bullish 1x2 risk reversal as well. Could be a collar. Could be not a collar, but a bullish risk reversal. So a lot of fun stuff. Could have some underlying as well. Who knows? Does this one make sense? That's what I want to know, Mr. Sebastian.
It makes sense the other way. If you're long the well, what doesn't make sense is having a position in DeVry. Here's what I know. All right, the only people buying DeVry probably graduated from the Keller School of Management.
Hey, that's quality paid education right there.
That is quality for-profit education.
That's almost as good as University of Phoenix.
Yes. Rising like a phoenix.
There we go. All right, that's going to do it for the old odd block today. As usual, you can check out more on the Options Insider, but now we're going to roll along right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is the portion of the program where we peer deep into the innermost workings, the inner sanctum, if you will, of the land of Options Express. And Alex shares with us his deep, deep insight and perhaps a few secrets coming off the Idea Hub. Alex, what do you have cooking over there in the inner sanctum today, Viceroy?
So speaking of the Idea Hub, it's Apple earnings, and that's what's lighting up the screen. And before I delve into
wait, someone should tell Tusaw that's coming up. Tusaw, are you aware of that? Apple earnings, have you heard that one?
No, we already had those this morning, I thought.
Oh, you're right, we did. So don't worry about it. Go back to sleep. You're good.
All right.
So what's lighting up the screen is Apple earnings. And before I jump into any of these, let's understand that these premiums are enormous for a reason. So before anybody does any of this stuff, really take a hard look at it. But generally, when I go to Ideas Hub, there's, 3 or 4 weeklies. I hit it up a couple minutes ago, and it's got pages of weeklies. And what they're coming out of is tech. They're coming out of Apple, IBM, Google. But if you look at the week 4, the Jan week 4s, that's the end of month option, the Apple Condor, $35 out of the money, $10 wide. So you're talking about like the 475, 465 put, 535, 545 call, $10 Condor weekly, which means it's good for essentially 6 business days, $4. Now, again, before you rush out to do that, those earnings are on the 23rd. So it appears from the screen that that's juicing much of the liquid technology stuff. I got IBM on the screen in weeklies. Same scenario. I've got Google on the screen in weeklies. Everybody seems to be clustering around the Apple news. There's Russell stuff on the screen. There's NASDAQ stuff on the screen. I think it's all coming out of Apple. I think there'll be some rollover into the rest of the market. So lots of weekly stuff. There's lots of really fat premiums, but understand that it's Apple earnings, and you could get some really big moves next week. And I think those moves are going to impact the market. I don't think the Apple event is going to be an isolated event, because you're seeing lots of weekly stuff in the Russell and the NASDAQ. So if you want to play in those, it's not for the faint-hearted, but there's a lot of the week 4 stuff is coming up. Even some of the premiums in the Facebook week 4, and we kind of argue if Facebook is Apple related, but weekly premiums are huge for those investors that are suitable and want to play. There's some great premium sales there. If you think the earnings are going to be a big surprise, they're expensive to buy, but there's a reason they're expensive to buy. What else is going on here at OX? We released an update on Extend this week. It's a mandatory update for those folks who use Extend. That's the applet platform. And walk limit. We've talked about that a couple times on the show. The walk limit product that lets you in a spread, and only in a spread, lets you essentially establish a range. If the spread is $1.30, and you want to sell it at $1.20, no worse than $1.20, the walk limit now is customizable, so that before you could only set it in the middle of the NBBO and have it walk from the middle down. Now you can customize the limit so that you could set it at $1.24, have it stop at $1.18 in the $1.10, $1.30 example. You don't have to sit there and watch it all the time, so it's a time saver, and it doesn't cost anything. There's no cancel fees and spreads. It's just conventional, so it's a really cool product. And to people who run multiple screens, or people who are working a lot of orders at any point in time, one day you ought to get Sebastian, Tucson, and myself to tell you our worst stories, and I bet all of them will be an order that we forgot, or when they were on the floor and lost count. So this is a great tool because it does all that for you.
Anything that can automate that process. As I've said before, is a beneficial thing, and I'm curious to check out the Extend update. I have to run that one myself. I'm always interested to see what kind of functionality they could add to Extend. And I know Uncle Mike, you're probably champing at the bit over there to comment on those Apple condors. I know you're a bit of the Apple premium seller these days. What do you think about that $4 weekly, $10 out, or was it $35 out of the money condors there?
And if you have a little bit of money in it, I don't know if I'd want to put too much in it. It's like what Alex says, it has this for a reason, and my goal is that I'm hoping that tomorrow I can get out of Apple altogether going into the earnings report. That's typically, as people who listen to the show, I hate earnings announcements. It just puts a monkey wrench into everything that I do. So typically not a fan of selling premium going into earnings, but if I have to stay in it, I'll stay in it just to stay consistent with the role and having exposure to Apple. But I mean, keep in mind, folks, I'm playing with, I'm not doing this with leveraged money. I'm doing this with money with which you can afford to own the stock with. So I'd prefer not to be a levered premium seller going into earnings with Apple 10 times out of 10 if I could help it.
You know, people tend to forget too, you mentioned on the long side of this type of condor, and of course it's a attractive sale for a lot of people. But given this week leading into earnings, this is where we talk about the asymmetric nature of decay. You're not really going to get a lot of decay in these weeklies going into this earnings announcement. It's going to hold its value fairly well. So if you're looking for a pricey but still perhaps somewhat reasonable, you think there's going to be a big gap coming in, play for a couple of days going into earnings, as long as you get out probably before the big movement. If you hold it through the earnings event, all bets are off. But the decay is going to come out. You need a really big move to offset that, obviously. But going into that, you probably will get a little bit of reprieve from old mother time decay, just because Apple and these big names tend to get a lot of juice that offsets that time decay for the days leading up to earnings, and you maybe get a few days of free gamma out of that, which a lot of people who just run to hit bids on juicy things like that tend to forget.
You do. And then, the other thing to mention on there, how many times over the past couple of years have we talked about how Apple has such low volatility, and then after an earnings announcement, Apple moves 50 points. Now, going into earnings, Apple actually has some higher volatility. It's going to be quite interesting on the February 4th when Apple earnings come out, that's for sure.
You're going to start freaking out some of our listeners, too. Throwing out all these crazy dates out there. You remember, too, last quarter even was a great example. A lot of people have shifted toward the dark side in Apple of late just because they do have much higher vol levels, a little more attractive from the premium sellers. And I talked to a lot of people going into last Apple earnings. You'll recall the earnings came out, the stock moved, and yet the vol didn't really come off as a lot of people expected on that Friday. So a lot of people, perhaps somewhat foolishly, given what was coming down the pike, held on to those short vol positions going through the weekend. Of course, everyone knows Hurricane Sandy came in that Monday. The markets were closed until Wednesday. If you were short vol in Apple all that time, you got your hat handed to you, unless you were able to survive that and hold it until it eventually came in on Thursday or so, or maybe Friday. So it was a long week, is what I'm trying to say there. So keep that in mind. I'm not saying a hurricane's going to blow in, but sometimes these things don't exactly perform the way you're thinking. If you're planning to blast this out and all this vol is going to come off the next day, you may be sometimes surprised at exactly how this plays out. So keep it in mind. Asymmetric decay may get a few days of free gamma, and if you're coming in on the short side, don't expect this to decay that much until the event, and then of course you're rolling the dice there as usual. Before we go, Alex, one thing I think might interest you, I forgot to bring this up in the trading block, but I was talking to all your cohorts, your former cohorts over there at the SIBO earlier this week, and they were discussing some of their various initiatives for the year. One of the things I thought was kind of interesting is, you'll recall, Uncle Mike, you'll remember this as well, they made a lot of noise, a lot of furor last year with the launch of the SPX PM and the creation of this C2 exchange, essentially to house the SPX PM contract. That was indeed the marquee product that was going up on that exchange. And now they've announced that that product has not exactly, let's say, lit the world on fire. And so what they're doing is pulling it off of C2 and putting it back onto the main mothership exchange, the SIBO, so they can create this SPX suite, essentially, of all the products, SPX PM, SPX Original, I suppose you can call it, SPX AM, all the weeklies and all those kind of products all kind of rolled into one on the hybrid system so everyone can trade them on the same platform. Makes a great deal of sense. of course, the next logical question I had for them is, of course, what about C2? You created this exchange in many ways for to house this product, and yet they were kind of silent on that. So that new exchange that they created to house this product and many others, not too much coming down the pike for C2. So I think you can kind of surmise that C2, along with its marquee product, not exactly a rollicking success, would you say, Alex?
I would give it more time. I don't know if you saw the other announcement that they made today. Serial expirations in the top 100 names. So now everything, instead of trading the old cycles, will trade serial, so that, let's say you've got the old Jan cycle, no, it's the old March cycle, June cycle. Now everything's going to be serial. It's clear that this industry is going towards the weeklies and more front month serials. So SPX PM, I think the entire industry would have bet that the SPX PM would have been a huge success, and I think it surprised everybody in the industry. I think Bill Brodsky getting the SEC to agree to a PM settled index again had to take an enormous amount of work, and I'm kind of surprised it hasn't done better. There's two issues. There's the logic of PM, and there was the concept of C2. C2 is kind of a longer discussion, but I'm just shocked that the industry hasn't embraced PM to a larger degree. I expect that the PM stuff is still being done upstairs then. It's still being done structured, because I thought it would have been a big hit.
Yeah, I think a lot of people were assuming it was a slam dunk. There were a couple of little structural hiccups with the way it was implemented that I think kept a lot of people on it. And, of course, the inertia is still down there on the floor. And that apparently is where it still is for the most part. So we'll see if this move can juice some life back into SPXPM. But an interesting one, and I wanted to bring it up at the top of the show. And as usual, we got sidetracked. So I thought it was an interesting one to throw out there. But thank you for that, Alex, for that rundown in the old Xpress Block. And now we're going to roll right into the strategy block.
The strategy block.
I just love that I can just picture you, Uncle Mike, sitting by the fire, stroking your chin, and wondering aloud to yourself, about your topic du jour. And what, pray tell, sir, as our listeners wait with bated breath, what is your topic du jour for this episode?
Well, I couldn't resist that one. I want to talk to you guys about getting out of nickel options. And I've talked about this before, but we have expiration coming up tomorrow. Well, if you're listening to the show, today's expiration Friday, if you got the show the first day. I want to talk about the importance of closing out nickel options and how this actually can affect things and why I think it's an important thing. First thing that I want to talk about are options that have AM settlement on a Friday morning. So for example, let's say that it's right now as we're recording this show, it's Thursday afternoon, the day before expiration. And let's say that you're short an option on RUT, the Russell 2000 index. Well, the settlement with which that works is it's based upon the open tomorrow morning on Friday morning. So you're not able to trade. The market's closed right now. You're not able to trade any options on RUT at this point. So let's say that I'm still short an option, I'm at the mercy of what the open of the market is tomorrow morning. Now, it's not the actual real open that you see on CNBC or Fox Business or on your account of RUT. You actually have to wait until usually a couple hours into the trading day before you see what the official open is of RUT, and that's what the settlement is. So let's say that like right now, today, RUT closed at about 890. Let's say that tomorrow morning, the RUT gaps down to say 882, and you're thinking, oh, phew. You wipe the sweat off your forehead. I was just naked short the 880 puts and I'm okay. Well, not necessarily. you have to make sure and see what the actual open was, because the open that you see might not necessarily be what the official open is, because all the stocks may not have been trading at 8:30 Chicago time when the cash market opened. So the first thing that I want to emphasize is that our rule at RCM, if we're short options going into settlement, typically we like to have a 20-point buffer in terms of getting out of them. So in other words, today I was actually short some 870 puts on RUT. Now, I didn't get out of all of them, but that one with a 20-point gap, with a 20-point buffer zone, so to speak, I'm comfortable staying in them, but I still had orders to get out of them, and I got out of a few of them, but not all of them. So with that, that's a general trading rule with which we like to follow. And here's why. I paid a dime to get out of those short options today. And I'm still this is like the borderline to me, but the borderline to us is 20 points away. Now, why is that? Well, let's say that all of a sudden RUT were to gap down tomorrow to say 860 or to 850. Now, I don't think it's going to gap down that much. I don't think that's likely, but you never know. If that's the case, you lose. If it gaps down and I'm still able to trade the option, then I can make an adjustment. I can do a roll. I can buy to close. I can do various things. I at least have power. If you're on the wrong side of the trade going into settlement on a cash settled option like that, you lose. That's just all there is to it. The money's taken out of your account. Thanks for playing. And if you don't have enough, then you get to talk with the nice folks in the margin department. So my point is that make sure that you're playing it safe going into settlement. Like Alex talks about trades with which we forgot to make and things like that. I think that's very important. And I also think that it's important to understand what your risk is going into settlement. Is it worth a dime to be sweating big time going into settlement? To me, it's not. And you're not going to blow out your account by closing out options for nickels and dimes. You can blow out your account very easily just that one time, and once it's all it takes, to where if something goes in the money and it goes against you on a cash settled option. Now, that's the first thing that I want to talk about today. Now, the second thing that I want to talk about is, let's say that you have just a traditional stock option that expires on the third Friday of every month. And this applies to weeklies as well, so understand what the weekly settlements are also, but I'm just going to use monthlies because tomorrow is the monthly expiration Friday. When going into something like this, let's say that you have a spread, and that spread is out of the money. You have a credit spread, it's out of the money, and you are just excited that it looks like it's going to expire worthless, and you think that you've done this 4 months in a row. You're really excited about the credit spreads, and then you're excited about Sunday night logging into your Options Express account and finding the coveted clean screen. The clean screen means all the options have expired worthless, and you don't even see them in your positions page anymore. The screen is clean. It's a beautiful thing for a credit spreader. You start up the next week, start the process all over again. You feel like a genius on Sunday nights and Monday mornings when that happens. Here's the problem. If you consistently do that, let's say that you decide that you're short a put spread. Let's say XYZ stock is at $55 a share and you're short the 45.50 put spread, and it's going to expire on Friday. So it's at $51 going into the final minutes of the trading day. You know what? I could probably get out of that now for maybe 10 cents because we have a nickel on the long put side, a nickel on the short put side, or a dime or whatever. I don't want to do it. I don't want to pay the commission. I don't want to pay those evil market makers that nickel or whatever it is. I don't want to do it. Okay, that's fine. But if that's the case, then you have to be prepared to have that stock put to you. Because let's say, for example, that stock, remember, you're short the 50-45 bull put spread. Let's say, for example, that after the close of the market, the stock goes from 50 to 49. Well, at that point in time, even though it happens after the market, you're still vulnerable to assignment. So you're going to be assigned 100 shares of stock, assuming that's you for every one lot that you did. You're going to own 100 shares of stock. And you're probably thinking, oh, okay, Mike, that's fine. I'm fine being long 100 shares of stock because after all, I got that 45 put to protect me. Wrong. Very wrong. Not only kind of wrong, but very wrong. You do not have that 45 put to protect you. Okay, so let's say we're going into the weekend, you're going to be long 100 shares of stock. You're thinking, okay, I'm long 100 shares of stock, and I'm fine with that because of the fact that, you know what, I didn't like this, but come Monday morning, as soon as the market opens, what I'm going to do is I'll just sell the stock, and okay, I learned my lesson. I'll get out, stock's at 49, I'm only losing $1. Well, here's what can happen. Let's say that come Sunday night, their accounting staff comes out for that company and says, we have been lying for 10 years. None of this stuff is actually true. We've really fooled you. We are evil, bad, and horrible. We're all going to go to jail, but we wanted you guys to know about it on Sunday night. Well, if that's the case, then come Monday morning, it's very likely you're going to get a gap down in XYZ stock, and the stock's now going to be trading at $13 a share. So initially, you thought that you were risking $500 on this trade because you had the 5 points between the strike prices and the spread, and you thought you were being really smart, $500 minus whatever credit you got, and you're happy with that trade. You did your risk management, but you got greedy going into the weekend because that 10 cents was just too much for you to pay. Now you're out $4,000, and you did that all because of the fact that you wanted to save a nickel. Shame on you. Now, with that, do I let certain options go into expiration and expire worthless? Yes, I do. But like I said, I have a 20-point buffer that I use on RUT for anything that I'm doing, and I always have a set limit of how far I'm willing to let it go before I let something go into expiration. If we're real close to the short strike price, folks, I get out. And you're not going to blow out an account by getting out of profitable option positions for nickels. If you continue to stay in the account for nickels, then you have the chance to have something like that happen and blow out your account, and then it really doesn't matter what you do at that point because you don't have any money. And that is one to grow on, folks.
Wow, this is an unusually strident Uncle Mike Tusaw strategy block. I like it. I like this new side of you. A little bit of an edge. It's good. I think this is interesting. I think our listeners will respond to this.
I hope to get the point across. I just had too many conversations at expiration with people who are just convinced that things are going to expire worthless, and hopefully this scares some sense into people. That's the goal.
Scaring them straight, Uncle Mike Tusaw. I like it. I think the first point was really interesting because we've hit on closing out for nickels 1,000 times in the past, but we never really hit on the cash settled aspect of that, which you're right is extraordinarily dangerous and completely capricious for the most part, and you don't want to be beholden to that if you don't have to be.
No, you do not. It's not a fun feeling.
Let me make an additional point. First of all, Mike, it's great advice, but the additional point is now that so much spread trading is allowed in qualified accounts, in retirement accounts, the concept of hoping and praying that something is going to go off worthless in an IRA where you don't have a lot of cash, and all of a sudden something pops and you've got a nightmare scenario. I mean, we're one of the firms that allows spreads in IRA accounts, and we're very proactive in terms of getting to people on Tuesday or Wednesday and talking about rolling or adjusting. But the AM settlement can just be a nightmare because we've all seen it where you talked about this, Mike. Russell closes at 890. Tomorrow morning's settlement is some absurd number, and the first tick is 892.23, but the settlement was 897. And you kind of look at it and say, how the hell did that happen? Don't be in a circumstance where you're going to scratch your head and say, how the hell did that happen for a nickel or a dime? And here at Options Express and at other brokerage houses, there are reduced commissions for closing stuff out when it's low priced and near expiration week, and take advantage of those. The old adage used to be, if you wouldn't sell it for a nickel, don't leave it out there for a nickel.
Yeah, those are good, wise words. Listeners may think we harp on this issue quite a bit on the show, and we do, and there's a reason for it. I think all of us here have seen what happens if you don't close out those positions, and the risk is nowhere near the reward. And you're right, Alex, that's a great way to think of it. If you wouldn't come out here and blast those out to open at a nickel, then for the love of God, why are you leaving it on? Take it off. Sleep well at night, pay a little commission, and then just sleep much easier at night.
Yeah, the worst excuse in the world. I don't care what your commission schedule is, but the worst excuse in the world is trying to shave commissions and not having a full understanding. I mean, we could do a whole show one day on AM versus PM and how it got moved to AM, but risk management. Back to the smartest guy I know in this industry prior to trading options was a card counter. And a card counter to me is a consummate risk manager, not a gambler.
Alex, how did you know about my card counting past, sir? You flatter me, but thank you.
It only has to happen once, then people become believers in what we're saying about getting out at the nickels. Once
true.
It happens to you once, then you learn real quick.
That's true. Hopefully we can save them that painful lesson. All right, thank you for that, Uncle Mike, and that's going to do it for the strategy block, and now we're going to dive right into Around the Block.
Around the Block.
All right, and that sound of nice Chicago traffic means it's time for our final segment, Around the Block. This is, of course, where we peer into the future and give you an inkling of what's on our horizon coming up. And, of course, earnings. It is indeed earnings season. One final recap here on Intel. Intel closed at $22.68 today with the at-the-money straddle, front-month straddle here in Jan, trading about 65 cents at 80 cents. And looks like we're seeing the stock performing right about in that range. The stock's down about 80 to 90 cents right now in the after hours. So if you bought that straddle, you might be able to scratch it. We'll see where this actually opens up tomorrow, hovering down about 90 cents or so, or 80 cents in the after hours right now. So Intel, not a huge mover, but then again, I don't think anyone expected it. Given these straddles and these vol levels, no one was expecting it to light the earth on fire. Of course, talking about earnings, it is indeed a full earnings calendar coming up next week, starting with some little fruit company that I'm sure someone's heard of at one point or the other, good old Apple, reporting on the 23rd. We also have another A-tech name, a little bit smaller, but still someone interesting. We watch them every now and then on the show here, AMD. They are reporting on the 22nd. A nice $2 stock, so a bit of a contrast there to Apple. Of course, Southwest Airlines coming out on the 24th. Another tech name, Google, Big Goog, reporting on the 22nd. Nokia coming out on the 24th. And, of course, I shouldn't say that anymore. The former premium seller's dream, now a bit of a mixed bag. Microsoft is announcing on the 24th as well. And this name closing today at about 27.25 today. And in many years past, this has been one of the most reliable premium sales in the business. You can come in and blast out iron condors or straddles in front month going into earnings in Apple or in Microsoft, and you could pretty much rely on the fact that you would keep most, if not all, of that premium. These days, Microsoft moving a little bit. There's some announcements, Windows 8, the Nokia developments, the Surface tablets, a lot of things going on over there to actually give it a little bit of juice. In fact, we're looking right now at Microsoft, and they're trading about a 23 vol, which is a little bit high actually for this name historically. They usually are a much more sedate name. So an interesting one to watch. I'll keep an eye on them going into next week's earnings. I would be remiss if I neglected to mention as well the Widowmaker itself, Netflix. I think there are still quite a few OX customers who are smarting from this one, Alex. The Netflix are coming out on the 23rd. This one really...
there are lots of people out there. And as long as we're talking about earnings, very quickly, let me two reminders. Google last time, they slipped out early. So be careful about that.
That's true.
And
keep that in mind if you're writing premium out there or something like that. You may have a little bit of an early development on your hands. If they did it again, that would be something.
Yeah, and that, it's almost too funny to if you tell that story to somebody, they kind of look at you and go, what? But another thing to remember is these are planned earnings dates. And last week we saw American Express come out a week before their planned date. I don't know how diabolical these corporate treasurers are. And Google is notorious for, coming out during expiration week. They're not. They're coming out next week. But be careful. These are scheduled dates. And as we saw with Google last time, they released during the day or their vendor released during the day early. If you're trading one of these, if you're trading Apple earnings or Google earnings or any of these big earnings next week, Nokia, Microsoft, you got a position on. Make sure you've got your mobile device with you because things can happen early. And as we saw with Google, they came out hours early and the market went ballistic.
Yet another reason to perhaps take the long side of some of those condors you were talking about earlier, Alex. Get a few days of free gamma. Who knows? Maybe you catch a nice little bonus in your net in an early announcement or something along those lines. Always good to be prepared for those sorts of things. But yeah, an interesting week coming up. And, of course, I always like to talk to my cohorts here on the panel to see what they're watching for the week ahead. We'll kick things off with you, Senior Sebastian. What are you watching for the week ahead?
It's been interesting watching the VIX and the gold VIX kind of diverge and watching kind of the way VIX futures have been trading. I think that we're looking at this continued kind of slow creep higher until we start to run into some sort of wall of fear. What I'm seeing for really the time being is, you're going to win or lose on your stock picks, but individual stocks are not going to be driven by the S&P, and the S&P is not going to drive individual stocks. So you're going to have to be a little smarter about how you put together correlation trades, and that's really what I'm watching is what happens to the VIX? It threatened that 13 level this morning. Does the VIX get a 12 handle? I think it could. We'll see.
That would certainly be interesting. And you talk about those journalists wetting themselves with a story. That would certainly, if it hit in that range.
Yeah, I got as the VIX was selling off yesterday, I got assaulted by CNBC trying to figure out what was going on with the VIX. It was, and which was nice.
That's the kind of assault you welcome.
Yes, it is.
I don't, but you love that, so by all means.
Willing. Isn't that what they say?
By all means, you can have all the assaulting on that front, sir. I know that's music to your ears. All right, thank you for that. And Uncle Mike Tusaw, he of RCM Land, what are you watching for the week ahead, sir? I think I have an idea what's going to take up most of your time, but let our listeners know for sure.
Well, what's going to be interesting, of course, I'm watching the earnings announcements that you made. We have a lot of tech announcements, and a lot of the financial companies already reported. And what's going to be interesting going into next week is if you look at the sector shifting in the marketplace to see what's going to happen. Just looking at the sectors right now, XLF has obviously been doing very well. The financials have played a big part in this recent market rally. Tech's been lagging, and when we see what happens over the course of the next week, it's going to be interesting to see how things work out or how the market reacts to what Apple has to say and just all the other names with which you mentioned to see where the money shifts, whether you'll see it shift out of financials and into technology and the market continues to go higher, or just kind of like as Alex said, there's a lot of reason to believe that we could be seeing a pretty big market move, but you don't know which way. And I think that next week, a lot of these tech names reporting earnings could be a catalyst.
Yes, these days, whither tech goes, there goes the market in many cases. Certainly with Apple. Apple is, as we said many times, an index unto itself. And where they go, a lot of people tend to follow in these days. So something certainly to keep an eye on in the coming week. And unfortunately, that's going to do it for all of us here on the Option Block All-Star panel for today. But before we go, I'd like to check in with all of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. We'll mix it up a little bit today. Alex, we'll start with you. What is coming up in the land of Options Express?
Live event January 26th in Minneapolis. Our head of education, Joe Cusack, will be up there. And one thing about our live events now, they are now simulcast as webinars. And one thing we do here at OX is there are often 1 or 2 webinars a day, so people should come to the site, look at the webinar schedule. All our events are free. All our webinars are free. All of our live events are free. I know on the 29th, We have a guest speaker who's doing the webinar on gold and silver futures, and I'm spacing on her name right now, but I listened to the one she did a couple months back and took pages of notes. So come to the site, look at the schedule, hit the free education tab, webinars, live events. If you can't make a live event, though, we simulcast them now as a webinar. So that's really cool. And if you are a customer, go look at Walk Limit, the new feature that automatically walks your limit, and the idea-rich Idea Hub.
Thank you for that, Alex. A great idea. Should be webcasting these things. Why let them vanish into the ether? You do so many of them. Let the people who don't have a chance to go to sunny Minneapolis this time of year, let them join the fun too. I take my hat off to Joe heading up that north this time of year. He's an intrepid trooper for the cause. All right. Speaking of troopers for the cause, Uncle Mike Tusaw, what is coming up on the on the RCM webinar train going forward?
On the 24th, we are broadcasting live at the world headquarters of Reliance Capital Markets. We're excited about that. And then on the February 4th recording of this show, I will announce a whole slew of webinars of what we have going on the new webinar train. We'll have everything from long-term financial management to futures to options. We're excited about everything that we have coming up. But on February 4th, when we record that show, so I guess when you'll be able to download it on February 5th, we will have a lot of info for you. Stay tuned.
Stay tuned indeed. And last but certainly not least, Mr. Sebastian, what is coming up in the land of the pit?
Hey, next Wednesday, we have a free webinar, an introduction to volatility. And I'll explain how volatility works and yada, yada, yada. It'll be awesome. Go to optionpit.com/events, and you'll be in great shape.
All right. Thank you for that, sir. And, of course, I'd like to remind all of you, the listeners, if you'd like to learn more about any of the topics we discussed on the show today, surf on over to theoptionsinsider.com. That's where you can post your comments, ask your questions, read all the unusual activity alerts, get all the breaking news from the options market for today, get some education, get some analysis, all sorts of fun stuff going on up there. Of course, you can find all the archived episodes of this program as well as every other program on the Options Insider Radio Network. So by all means, head on over there and check those out. Of course, you can also find us iTunes, Stitcher, wherever fine podcasts are purveyed. You can find our programming. And of course, all of us here on the Option Block All-Star Panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing and occasionally writing in to us here on the Odd Block and making this show such a fun show to do and such a success overall. We want to thank all of you out there. We couldn't do it without you. So thanks again for listening, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.